More good news for our domestic economy, and stock markets are still on the rise. Will 2017 be a year that surprises on the upside? We'll have a quick look at the strong US economy Trump has inherited, the improved outlook in China, and the fall in our local unemployment rate. US rate rises are back in focus after a jump in US inflation, with the headline CPI up to 2.5%, a post-2012 high, and core inflation also trending higher. And that's before the inflationary effects of aggressive tax cuts and other Trump policies kick in. So we still expect a March hike and at least two others in 2017 as the US Federal Reserve tries to play catch-up. US retail sales also impressed on the top side, so their stock market keeps powering through record territory, which is understandable in anticipation of corporate tax rates being slashed from 35% to 15%, although we will see how sustainable this will be as interest rates rise. In China, their economy is also looking healthier based on recent data, and the People's Bank of China increased their repo short-term interest rate by 10 basis points this month in an attempt to manage rising property prices and also capital outflows, and encouraged by a rise in their import and export volumes, which is all adding to the perception that global rates have found a base, and after years of low inflation, the reflation trade is in full swing. How widespread this increase in inflation around the globe will be is yet to be seen, and to what degree higher inflation in the US permeates the rest of the world is the great unknown. But the rise in the price of oil and a range of bulk commodities is a compelling factor. Here in Australia, it is the rising iron ore price that is most relevant, helped by the rise in the Chinese steel price. But with iron ore back above $90 per tonne, the benefits for government revenue and reducing debt are significant. So we're once again the lucky country, which is flowing through to a rise in business confidence at its highest level since February 2014. Consumer confidence wasn't quite so euphoric, up to 99.6, so just shy of the 100 neutral level. But the jobs data here was slightly better than expected, with a fall in the unemployment rate down to 5.7% and a 13,500 increase in net jobs. The problem, however, is that they were all part-time jobs, so we still have underemployment and plenty of capacity in labour markets, but jobs nevertheless. And finally, the Aussie dollar keeps ratcheting higher, even against a pretty strong US dollar, almost back to the pre-US election level. So we continue to suggest it has topside risks, with 78.25 the next major barrier. The RBA will be concerned if this level is breached, but not sufficiently to tempt them to cut rates any further, which we suggest are off the table in the current environment. And that's the market update from Bendigo Bank.